Good morning and welcome to today's third Thursday marketing meeting. We are so glad that you joined us today. Thank you so much for being here. We have an exciting lineup for you with some really cool information from Sterling Smith, who is our Director of Ag Research for AgriSampo North America, and a very special guest speaker today. We have Mike Hogan, who is the Corporate Origination Manager for Consolidated Grain and Barge. So guys, just go ahead and wave, say hi to these folks. And I'm going to pass it off, I believe, here real quick to Sterling. Are you ready?
I'm ready. Let's just go ahead and go through our slides here real quick that you have, Christy, and we'll talk about those, and then we'll move on to if you ever have any marketing, and by marketing, I mean the markets, any questions about that, certainly feel free to reach out. We study and watch these every day. In my case, I watch every market every day very closely, and that's not just the grain markets, that's everything from interest rates to the stock market. So if you ever have a question, no matter how off the wall it is, certainly feel free to reach out and ask. We're always here to help you.
Yep. We also have our marketing sign-up sheet here. We would love for you to take part in the information that we provide via phone call and email. Please feel free to sign up. If you have any questions, you can send us a note right here in the chat or the Q&A, and we'll get that information to you so you can get signed up.
Absolutely. These come out regularly. And here's a picture of Brooks. And Christy, Brooks is normally here. Where is Brooks? You got a new game. Kind of like, where's Waldo?
Exactly. It's where's Brooks today. We do not believe that he is hunting, although we think that could be an option yet today. Brooks is attending an 8th grade graduation today, and we are really excited for him to be able to do that, which is just incredible to see our kids grow up and move on, and he'll have a high schooler. But we do still kind of think that maybe this afternoon he might find a way to sneak out to the woods a little bit. And
that's me. My name's Sterling Smith, and I am the Director of Ag Research here at AgriSampo. And I have a pretty good background. Before I was at AgriSampo, I ran the agricultural product at a company called Bloomberg in New York. Prior to that, I was Director of Ag Research at Citibank in Chicago. Prior to that, I was a market analyst, occasional trader, and other things at CHS. Prior to that, I was at the Board of Trade in Chicago for about 18 years. Moved back home to Nebraska last summer. I grew up in a farming town about, well, it used to be about 40 miles from Omaha. It's now about 20 miles from Omaha. So city is kind of eating up some farmland there. It's kind of interesting. You know that Bill Gates is one of the largest owners of farmland in the United States. He is actually one of the largest farmland owners, if not the largest owner in Nebraska. It's interesting. Most of the land that he bought is actually in eastern Saunders County, which if you're familiar with Nebraska, Omaha can only grow west because of the river. So he has bought land that is actually going to be suburbia in 15 years. So it's quite interesting. Christy, do we have Mike's slides, or do we just want to go right directly to the drought monitor here?
Okay, so do you want me to go ahead and pull up the slides that Mike had sent us?
Well, tell you what, why don't we just go ahead and we'll just go right to the drought monitor. So if you'll let me share this, we have a brand new drought monitor out this morning, and I'm going to talk about the weather and what we see in some of the forecasts and some of the problems that we're actually having with the forecasts.
Okay, you should have it. It's the ball's in your court.
And everyone should be able to see the drought monitor here. And what we have some improvement, and then we have some problems. Obviously, the biggest area of concern is this area up here in the Dakotas. We have severe drought that it's improving on the edges, but particularly in North Dakota, we're not seeing any improvement. And from what we're getting from the 2- and 4-week forecasts that I've been looking at, and the meteorologists I talk to, there's not a lot of hope for improvement. That's the first worry. And I think the market is taking that into consideration. We've seen a lot of volatility in the wheat. One thing I would like to point out is the European Grain Council did issue their crop ideas. They don't issue them as frequently as the USDA, but they are expecting a little bit larger than normal crop. And French wheat conditions and things like that has improved. So that's probably inducing a little bit of the volatility because of the high prices. The area I'm really concerned about, though, is right here is the area east of me and northeast. If we look in Iowa, we've had an ongoing, continuing drought. It's not getting better. It's, in fact, getting worse. And the area that it's in, that area there north of Interstate 80, in particular, east of Des Moines and going up to there into southern Minnesota, that's really good ground up there. And seeing problems there, that's something that can materially affect the national yields. The other area that's not improving and in fact is getting worse is the area in Michigan. And we have not seen any ideas about improvement there. Now, the good news is, in terms of water, the area in Illinois, in Indiana, and Ohio, 2 weeks ago, 3 weeks ago, we were in a solid drought there. And that has improved noticeably. Now, we're seeing some very interesting flows and coming off the MGO models and things like that that are still showing a weak La Nina and patterns like that. But it's also interfering with the weather patterns, and the flows we're seeing are making 2 and 4 week forecasts verifying pretty well. And we're having a lot of problem with the 10-day forecast actually verifying. So that's one issue. The second issue is this area, particularly, we're fine here in eastern Nebraska, but this area in Iowa is something the market's going to start getting sensitive to here pretty soon if we don't see some improvement. And the variance in the forecast and the way we're seeing flows, we're looking at maybe getting some more precipitation up there. That's the good news. The bad news is it's coming in the form of severe weather. We're talking more thunderstorms, we're talking hail, high winds, things like that. So while we've had 3 days of fairly constructive rain here in Omaha, it's been like English weather. It's been raining off and on all day, and my yard is now, the neighbors are starting to get mad at me. It's turning into a hayfield. So from that point of view, the weather looks mixed, but this is something where we're going to draw a lot of volatility into the market. Mike, did you have anything you wanted to add?
I think that's that's a great synopsis as you look at it, and I continue to see the same things that you do when you look at Michigan, for example. The Gulf moisture looks like it's really opened up over the next 3 to 7 days from the forecast, and you do see from the Canadian prairies kind of swiping across the Dakota, Montana and the Dakotas there. It does look like it is going to see some improvement in some of these numbers as you look at it, probably anywhere from 1 inch to 2.5 forecast there. But it really, once it hits kind of Wisconsin, it really breaks apart. It doesn't get into Michigan. What is interesting is you do see the majority of the state of Iowa catching probably between 1 inch or 2 over the next 7 days, except for that little spot where the S and the L are kind of there. And as you mentioned before, that is a fairly critical spot when you look at it, kind of in that 3 corners of the state's area. And that continues to be a little bit dry. One of the things that I think will be of concern as we look forward, and we can talk about this when we do maybe a little bit of a tour of what's going on with the crops and planting, is as you get into the southern U.S., particularly some of the Gulf states, they've actually had an excess of moisture. And, we have seen a little bit of a delay in some of the plantings there, which, again, isn't a big deal because it looks like everything will still go in front of Memorial Day, which is kind of what we think of here in the more central Corn Belt area. But there it is getting a little bit late. Also, I've seen some reports of flooding in Kansas, and it looks like they're slated to get some more rain and moisture there. So that's a couple of the things that I'm seeing. But as you mentioned, just continue to watch some of these dry areas because that's certainly a little bit more of a concern than the wet spots right now.
Absolutely. And with problems with the 7 and 10 day forecast not really verifying, for a while here, the only rain that we ever got was in the forecast. It was always hoping for rain, and it didn't show up here until about a week and a half ago, and then it showed up good. If we have trouble with that forecast verifying, the market's going to be sensitive to that. And also with the Gulf opening up for moisture, if we've got areas that are too wet, particularly, let's say, south Interstate 74 and going on down, we're going to have some issues with that. And if we have any cotton fans on board here, we've got some issues out here in West Texas where, I've heard some talk about some stuff needing to be replanted, things like that. So that's going to be another issue that the market's going to be very sensitive to. The cotton market is a very interesting market in that we're seeing, a smaller balance sheet. We're expecting to see less cotton around, and we've got a demand story here for clothes and things like that. I just got an email that one of my sales reps who comes in to see me is actually going to be able to travel again. So people who haven't bought any new clothes over the last year, you know, bigger trousers, whatever it may be, there's going to be demand for that cotton, and we've seen Chinese cotton imports really go off the scale here, and that's something where we could see again a very sensitive and very interesting market.
Yeah, and Sterling, so I think that's a great point on cotton, as you mentioned, and we'll probably dig into this as we keep going. Just, you know, between global supply chains and some other items, you know, there's just a lot of stuff in that's being demanded right now. Not necessarily because it's in short supply, but because it's being demanded. Maybe before we, you know, break from the weather, I know the National Weather Service did put out their 3-month summer forecast. Other than maybe the central part of the U.S., they had above normal temperatures, the most of the moisture in the east, keeping with that drier theme out in the west. Did you have any, you know, thoughts or comments on that? Because I know, again, you kind of watch the weather forecast from a verification standpoint. I know historically those have been kind of a good general direction that we look at, but maybe not the most precise things in the world. And any thoughts or comments that you see from your seat in the world on that?
Well, what the weathermen that I've talked to, and I'm kind of getting the same picture myself, is there's concern about dryness in the plains and getting a situation, particularly after Memorial Day, where areas basically from central Nebraska going east, it may again turn dry. But again, it's a 4-week forecast, and you know how weathermen are. The ideas of seeing, you know, more rain in the east, though, the pattern does indicate that that would be what we would expect. So we may see, you know, particularly some issues in the northeast, and we will also probably, you know, in that eastern corn belt, particularly from points Indianapolis and east, we may find ourselves with some excessive moisture there.
Yeah, I think that makes some sense. You know, if you didn't have any final points on weather, I know you had some pretty interesting slides that you wanted to show us on planning progress and kind of where we're at there. Is this a good time to maybe switch over to that?
Absolutely. Here, let me jump right over here, and we'll go ahead and pull this up. And the first one I'm going to show you here is simply because we do things from the hometown here. I'm going to show you Nebraska soybean planting progress here. Let me switch my screen here. Let's see.
Yeah. And as you're bringing that up, Sterling, I do want to mention Jason had mentioned that he's kind of in the northeast North Dakota, just off of the Minnesota line, and he said he's hearing, you know, he had an inch in his gauge this morning, hearing reports of upwards of 5 inches there, which again, that'd be a nice shot of moisture for those folks, if that is indeed what verifies when we look back on these items.
Absolutely.
Here, you've got this cool looking thing here. What are we looking at, my man? How do we read this thing and what's it telling us?
This is soybean planting progress in Nebraska over the last 20 years. And this blue line right here that I'm highlighting, that's this year. We're #1 in getting soybeans in. This is the best year ever, and we're already at 71%. And if we take a look here at the average for this time of year, we would be sitting at roughly about 60%. So we're well ahead on that. Now we can do the same thing here and look at it nationally for corn. So we just type in. So if we look at overall U.S. planting progress for corn, you can see right here, this is the average chart, and the orange line is this year. So again, we are, you know, getting some pretty good separation. We're well ahead, but if you want to compare it year over year, right now we are trekking right along, right at the best pace ever. And if we take this back a little bit, we'll take this back 15 years, and the line I'm highlighting right here is the 2012 progress. So we are basically right in line with the progress in 2012 for planting corn nationally. And if we do the same thing here and we switch this over to soybeans, and we'll do the same thing here and bring up a chart of soybeans nationally. Again, you can see this year We are well ahead of where we would normally expect to be. And depending on how the weather works out, I know out here, if you're not planting right now, you're not farming. So I think we're going to see, another big jump this week on that. How are things going to be, points east and south of here? How's that going to work out? What do you think about that, Mike?
I think that's been the big question. So I think when you look at generally the I-states, as you move kind of just to your eastern part, they feel pretty good to me. It's been a good mixture of dry weather and rain, so I think that they're going to feel pretty good about it. Other than that spot in Iowa that we talked about, that northwest quadrant. Again, it's probably one of those where when you move towards the mid-south states, I think of northern Louisiana, probably through the Memphis area. Maybe then you take a zag from the Boot Hills of Missouri into central Missouri. All those areas really received too much rain, and they were behind. However, it is starting to clear up, and they've really been able to spot some stuff in over the last few days. So when I talk to a lot of our elevator folks there, they're really saying that, they feel like they've just about caught up. And, it really depends on how this 3 to 7 day rain materializes at this point, which does have some in the forecast for them. But again, it should be warm enough that before they had, it was topping out 60 for them, which is really quite cool for this time of year. But it looks like they're going to be in the upper 80s to low 90s now. I'm here in Louisville, Kentucky, and we're going to have 90s for about the next week or so. So I would be fully expecting that we see a national corn average, probably in the low 90s, maybe 91, 92%. When we look at it next week. Beans, that's really been one of those things over the last couple of years that folks have tried to get those in earlier. That seems to have led to increases in yields, as what the agronomists are telling us. Again, I think that's going to go along for it. But to me, when you think about what we're talking about, what's wet and what's dry, the folks that are dry, they're going to get it all in for the most part. I mean, they can run the race car pretty fast at that point. It's just kind of some of those mid-south states, and as you ride up the Mississippi River, they've been the ones that are having some issues. And I think once this, rain this week gets out of here, they're going to be free to kind of finish up and spot everything else in. I do worry a little bit about the northern Louisiana and Arkansas crops because they've just been so wet. But, again, at the end of the day, that's something the market doesn't pay a lot of attention to. But as an exporting company, it sure is something we like to pay attention to because that's kind of our first strike bushels. When someone like the Chinese come calling for things, but overall, I'd say you're gonna pick up right where you left off on your charts, my man.
Yeah. One thing that next week we're going to have a webinar that's recorded available. I'm going to be doing it with Bloomberg and Planalytics Meteorology, and they're going to have some very specific ideas about what's just happened. And along with that, they're going to have, obviously a 10 to 14 day forecast, but they're also going to have their longer range forecast as well. This is free of charge. There's no obligation. Certainly feel free to contact me, or we'll send out a link for you to sign up and get a part of this, because the weather that we're going to be having right now is going to be very, very important. And the fact that this crop has gone in so easily, especially compared to 2 and 3 years ago, how the weather plays out going forward is going to be very important. And something else, and Mike brought this up, that first strike corn, that first corn, it's going to be very interesting this year, because when I talk about what our export situation looks like currently and what I think it's going to look like next year, if you've got early corn, that corn is going to be, I hate to use this word, but it's going to be golden. It's going to be golden. There is demand there for that.
Yeah, no, absolutely. And maybe a couple points aside from that. One, it's always really interesting to listen to the guys over at Bloomberg plus Sterling. So I think that's going to be a good show. And two, as Christy mentioned earlier when she popped a few items up, there's a lot of market information coming at you guys, whether it's, this third Thursday presentation that we have going on today, to what you and Brooks put out daily, both in your write-ups and your midday comments that come across the phone. So for those of you out here that aren't signed up for those items, I would strongly encourage you to do that as clearly a neutral third party in all of this thing. It's good information. I get it as well. Just ahead.
Yeah, it's something I don't have an agenda. I don't get paid on a commission, anything like that. I try to make the information, just like when I was at Citibank, as objective as possible. That way you have to look at the good, you have to look at the bad, and you have to weigh both sides up. There's not somebody here, oh, you got to do this, because you're never going to get any bombast from me. That's one thing. You may get a good joke or two, but there won't be any bombastic ideas that you're going to see, insane corn prices. If you do see me putting out insane corn prices, look out. So.
No, I hear you on that. And maybe that's the good jump off point to this, Sterling. So I've always been a fan of some of your macro topics. And man, yesterday was just kind of a nasty looking day across the board. I mean, the only thing I saw up until you got to the very end of the day when some things started to rebound, what was the VIX and gold. And, if you're in the ag space, those are two things you don't like to see up most of the time. So kind of walk us through what happened yesterday. What's your take on that?
Okay, Christy, let's go ahead and switch over so I can put up my chart here. I'm going to put up a chart of the S&P 500 here.
Yep, it's back to you.
Okay. And let's go ahead and share this. And we're going to talk about what happened yesterday, because yesterday is something we need to be aware of, because sometimes this stuff all trades like it shares one common brain. So the first thing I'm going to point out, this is a chart of the S&P 500. And as you can see, we'll take it all the way back. We'll put in our little crash here. This was the start of COVID. Market broke down. And as you can see, we've moved up really quite nicely. Now, if we're going to zoom in right in, this is yesterday, okay? Market fell apart. This pink line is the 50-day moving average. And that's the first moving average that if you're in the stock market gets down there, you have to ask yourself a question. Is it going further down, or do I buy the dip? Which most of the time, as you can see, you look back here in history, buying the dip pays. And yesterday was a really interesting day. The market had been a little weak and wobbly. JP Morgan came out and said their high for the year for the S&P 500 was 4,200. And I don't listen to too many people. I listen to JP Morgan, and I listen to this guy. There's a guy across town. What's his name? Buffett. When he talks, I listen. Anybody else, I generally ignore. But you can see the market got right here. We made a high at 42.36. We started wobbling. People lightened up. Sell in May. Go away. Yesterday was kind of the crescendo of that. We opened up. The market was noticeably lower. We fell, and we tanked. Notice we came right back. That's important. How the market finishes the day is the most important thing. Smart money buys through the day and buys at the end of the day. Dumb money makes it trade early in the day. So what we can see here, now today we're back pushing higher, and we're going to form a pattern that kind of looks like a football goalpost if we can continue up today. If we trade higher tomorrow from here, that's an indication that the stock market should be making new highs. Why that matters if you're a grain trader. You saw what happened yesterday. Everything got sold. Everything. It started with Bitcoin, which don't even get me started, but Bitcoin completely collapsed and had a real problem. I'm going to bring up a chart of that here real quick. And when we started losing risk assets, this one, I don't consider, well, I'm not going to get on my soapbox, but look here. You can see what's happened to Bitcoin. It's collapsed. Bitcoin is considered a risk asset, a proxy for gold in some ways. And when this started collapsing, everything else started falling. And we have a lot of mechanical, a lot of machine trading. There's no more floor. There's not somebody like me to step in front of a market if it's going down. So what happens is when it starts falling, first thing you teach at the Board of Trade is don't buy it until it quits going down. Nobody will step in front of it, so the market kind of fell apart, and then we started to pick back up, and this lifted everything else back up. So if we do get some healthy, appetite for risk here, that's something that should be good for the stock market. And if we take a look at interest rates here, I'm going to go ahead. This is a 10-year interest rate, and how this has been doing. As you can see, it has been steadily climbing, and we spiked up a little bit yesterday. In a very broad sense, higher interest rates tend to be bad for risk assets at some point. We're probably not to that point yet. And I would guess it's probably going to take something close to 2 or 2.5% on this before the market starts to get edgy. So stocks and interest rates can go up together. Sometimes they've been able to do it for 2 or 3 years. So while this may cause some day-to-day jitters when interest rates go up, right now it's not that big of a problem. There's plenty of liquidity out there. And one thing for any particular commodity, we need to be very watchful if a story gets behind it, because there is a lot of money and there's a lot of money looking for a home. And if suddenly we see the idea that, well, corn is the new gold or gold is the new gold, that money gets behind it, it can push these markets out of a line in a hurry. And that's a spot where if you're marketing a crop and you get a spike up, there's your chance. I'm a big believer in incremental marketing, and this is something where you put a little bit on, maybe it goes higher, but if it's a good price for you, it's always going to be a good price for you. So that is what basically happened yesterday. And if you take a look, let's take a look and see how gold is doing here right now. Gold in and of itself, see the stock market's going up. The interesting thing about gold is my old boss at Citibank calls it a hedge against profits. You would think, you know, normally we view gold as something you buy when there's a problem. If you go back to, for example, the Boston bombing back in, I think that was in 2013 or 2014, gold went down $180 that day. Gold does not perform well when there's problems. Bonds perform well. Gold does not necessarily perform that well when the stock market goes down. So gold likes inflation. If we do see real inflation take hold, that's something that will push gold higher. And gold is a much more stable asset. It's something that many places are going to be willing to hold much more so than Bitcoin. And it's going to be interesting to see how corporate America feels about Bitcoin, because normally why we trade all this stuff in dollars, the dollar's normally stable. You know what the dollar's worth. So if you have something that's swinging around in value, even though you can hedge it, no hedge is absolutely perfect. And there may be a change of tone about Bitcoin. And if we have another plunge and it rattles the stock and treasury markets, I can guarantee you the regulators are going to be paying attention.
Yeah, and I think you bring up a couple great points on that. One, we've got a new entrant into the risk asset world, which are, you know, these cryptocurrencies, especially Bitcoin has definitely been the proxy to that. I really do want to harp in on one thing Sterling mentioned on gold, the hedge against profits, and how true that is. So when you think about both the Boston bombing that he talked about, go back to the Great Recession in 2008, 2009, even going back to the pandemic start in what we'll call basically March of 2020, one of the things that a lot of folks say, boy, the doomsday folks say, you want to be in gold at that point. If you actually look at those points in and around and surrounding that, gold, as Sterling mentioned, went down. It tanked. It did not provide the protection. What did provide the protection during those times was the U.S. dollar, as he somewhat mentioned. Those are the things, that's where people flood to and spike, because that's the reserve currency of the world. That's where it comes into play. Now, think about what we do for a daily living. We are in the ag commodity space, which, again, we play in that inflation space, but there is probably some connection to the U.S. dollar, from a correlation standpoint. And so when those go up, that does make it a little bit harder for our ags to rally. So be really cognizant of that, because we saw that in all those time frames. You know, we really saw outside of our own fundamentals struggles within the grain market for those, whether it was a few day period, few week to a few month period on some of those. So that is absolutely something I think to keep in mind when these sort of capitulation type of activities take place.
Yeah, here's a chart of the U.S. dollar, and you can see right here is the COVID situation, and the dollar spiked. What happens? People pitch assets. They sell their stocks. They sell their bonds. They get back into the dollar, and then when the smoke clears, you go back and you reallocate your assets. And that's something where if we start to see the dollar right now looks like it's forming a pretty good downtrend. And in fact, I see you've got some moving averages here that are about to cross that may be indicative of that we are going to have a softer dollar. That is a natural tailwind for commodities. Granted, you have to have a good story, and you need to have those supply things and all those things going on. But it's much easier for a market to rally in a falling dollar environment than it is in a rising dollar environment. And again, you can see here how the dollar performed, particularly here if we go back to 2000, here's the problems in 2008. Here, here we kind of had, a period where the dollar was weaker, where we had real good stock performance. So again, how the currency behaves is one of those tells that we always look for.
No, and that makes sense, and that's great stuff, and thanks for bringing that chart up. maybe it's time, from the market's perspective, what are you seeing on the ag side of thing, maybe from the futures side of it? And then maybe I'll try to fill in some blanks on the cash side of it, Sterling.
Well, let's take a look here. Let's first take a look at December corn. So this is a chart of December corn. And as you can see, we had a very, very handsome run up here, followed by a market break where, again, we came back down to the 50-day moving average. This defaults to a 50, 100, and 200-day moving average, which is not what we normally use in the commodity world. Normally, we use the 10, 20, and 50-day moving average, simply because you have crop years and things, and that makes a 200-day moving average a little bit big. But as you can see here, the market did come down to the 50-day moving average, and it held it. So we're trying to rebuild here. I don't care for this crossing right here. I have a little bit of a problem with that, but that's, it's something, it can change. This is new crop corn. We got two variables here we need to think about. Number one is China, and number two is the weather. And I can tell you right now, if it stops raining, no one's going to care about these moving averages. The market will change direction. So that's what I see going on with this. We've put in a high, but it looks like we're trying to form a base. Normally, we see a market build risk premium coming into pollination. So coming into June and July, we see funds coming in here and buying this. Now, if we take a look at where the funds are with corn right now, we can see here, if we go to COT report, we can see where the funds are. And right now they're long 302,000. Notice they sold 51,000 over the last week. And if we go ahead and we'll bring this up as a seasonal chart, we'll look at this. Right now, the funds for this time of year, they're right here. They're this blue line. So they are normally quite long. They've been long. And it's interesting. The funds handled this rally better than they usually do. Usually they drive the market up on themselves. They came into this rally long, and they've been slowly selling, so they're making money. That means, number one, they get nice bonuses. Number two, they have more cash to play with. So when that fund manager comes in here and he decides he wants to buy corn, he's got the firepower to do it, and they've been slightly liquidating. But here, if you look here in June, July, the trend is that they go in and buy it. So is it possible that we're going to see them come in here and start buying it and be supportive of the market? That is entirely conceivable. That is, when you look around the corner, maybe on the next dip, they're going to be in here buying. And that's something that could change the complexion of this market, because clearly they have the firepower and the willingness to, and there is that liquidity out there.
Yeah, and I think that's something that, when you look at those COT reports, it's been pretty apparent to me, Sterling, that, this has been basically a commercial-led, in other words, a real rally, meaning that it's not just money buying into it. There's some cash ramifications to it. And I think that's been very true. And then when you also look at the fund space, I know we both have friends in the industry. It's been a great year for whether you're trading the ags or all of them, because your equity guys, your bond guys, they all have basically pluses on their P&L when you look at it. So there is, plus you factor in just all the money that's been injected into the system. There's definitely some buying power that happens there. And one of the interesting things is we're finally starting to see, when you break this apart, long only, short only, meaning that, because what you're showing here is the net, meaning, there's X amount of longs, X amount of shorts. In it for the last couple of weeks, there was basically right up until the peak, there was literally no shorts. It was all long and no shorts to offset that. And now we're starting to finally find some short fund people come back into it. So a little bit of a different take on it, but you're absolutely right that if they want to go into this with, both fists full of cash, they absolutely can. Now, keep in mind, I think they can do that in any direction, but I think it's a little bit too early in the year for them to make that move, as you showed from that seasonal standpoint.
Yeah, I don't really think, if I'm a PM right now, I'm not going to be big about trying to establish shorts. That's hazardous if you're a fund manager. Now, if you're a crop marketer and a farmer, it's a different situation because it's a real hedge. It's not just a play on which way the market's going and saying this price level is good for my cash flow. This makes sense here. And there's lots of ways to do it. One thing that yesterday's flush out kind of helped, and if we can get a couple, 3-4 days of quiet here, option premium will come back down. So if you want to put on, some risk reversals or some min maxes, you're not going to have to pay up nearly as much premium because the market will settle down and that premium will come back and become a little bit lower.
Yeah, and I think that's probably, especially for the producers on this call and even those kind of just industry folks, that's probably been the biggest change in the last, 20 years, probably 5 years in this marketplace is, commercial elevators and then these kind of like CGB and all of our competitors offer very similar products. It used to be you were really trying to figure out when the high in a marketplace was going to be really in a year because that's when you want to sell a bunch of crop because you really could only do so, here's my cash price and I could forward contract that. Then about 30, 40 years ago, you could break those apart and do a basis in the future. Well, now a lot of the option-based contracts are coming out. And one of the things that I know we've seen a lot of success for our customers that have been willing to do it is what we consider a wide windowed, our language is an equalizer min-max, but that's kind of what Sterling's talking about, where you would have essentially a put bought for a floor. You might go out and sell a call for a ceiling is the basic principle of it. And again, almost everybody has their own version of that. And what's really nice about those is you can be very imprecise about your entry points. And because of that, you can have those, you can put one on at the start of a rally and literally capture the majority of the rally for your cash bushels. Whereas before you might have forward contracted that and said, shucks, I sold that 4, this thing went to 5. I feel kind of bad, which shouldn't be our mentality, right? We should, want to continue to say, okay, let's improve that average and sell some more at 5. But just working with producers so many years, that happens. So I would strongly suggest that you look at some of the new tools that are out there at your local elevators, and even, if you have a brokerage account, some of those types of things, because they're really, really beneficial in volatile markets. I've been doing this for 20 years. Sterling, I think you've been doing it for maybe one more year than me. I won't age you too much there. But we've both been doing this. There you go. So we both have been doing this long enough that, we know that we don't know ultimately at the end of the day on a lot of these things. And neither should, especially the producer that, their day job is getting this stuff in the ground, out of the ground. So really look at some of those new tools because I think that can be really beneficial because I'm sure as we're having our conversation here, we're probably spinning a few heads on it, but there's a simple way to help yourself out with that. So.
Yeah. And if you have any questions, I'm more than happy to sit down with you and we can go through it step by step and I'll explain it to you in a way that you'll understand where it'll make sense to you. And it's not where I'm trying to sell you something. So you will get objective information.
Yeah. And I think that's a good point there. When we look at it. So what are you seeing on the beans right now, Sterling? Anything catching your fancy over there?
Yeah, actually, when I did the technical report, I wasn't in love with the beans and kind of mentioned that they might get a little heavy. And, they did their bit for me and fell down, made me look smart at least for a few minutes. Here with the beans, again, actually, here I've got another chart here we're going to bring up of this. Let's see, open this one up here. Okay, so what we have here is we have a market. We're seeing moving average and cross. We're trading below moving average and we can't take it out. That is not healthy. That when a market fails and fails, what happens is you've got guys who bought beans, fund managers, whoever, in here or in here. Now they're starting to get underwater and they're going to have to decide, do I keep and sit on this? Or do I let it go? So right now, the beans, while the corn looks, I can make a case for the bullish corn. I'm kind of having a problem here, saying the beans look good. Open interest has really not changed demonstrably. And the stochastics here, which this is an oscillator, and this measures, is a market overbought or oversold. Right now, this says sell me, sell me, sell me all day. And so we've got a combination. We have a number of weak things in place here, which I think is a little bit interesting because normally you see corn and beans generally like to work together. And we are seeing some failings in the bean market. Some of that I think may be capital being drummed off into the corn market that would normally be allocated to the soybean market. I think that may be part of the problem. But right now, the corn is going to own the soybeans. So corn catches cold, the beans are going to get pneumonia. If the corn catches on fire, the beans will get dragged along with it. Is really about where I am right now with this.
Yeah, and I would jive, and I'll maybe add a few. I know we're kind of on the technical side of this, and I'm completely in agreement, guys. These are major red flags from the seat that I sit in when you're looking at things that Sterling is talking about. And you can add RSIs and some other things in there. They're all flashing, as you mentioned, that you can establish the short position and keep stops above at this point. A few things that I would add from just the fundamental standpoint. The market is starting to get to the point where it believes that it's finding the acres for corn at this juncture. So I think that's one of the things to keep in mind. And we've seen that corn-soy ratio really start to adjust itself in the last few sessions. Now, yesterday, some of that went out the window a little bit in the overall washout. But I think that's one thing that we want to keep in mind when you look at it. It looks like Sterling's going to bring that up here. I think we're down to like the 2.25 mark on that. When he brings up the chart, and then we're going to be back somewhere more in the midpoint. I think just under the 2.5, yeah, just under the 2.5 area. Looks like about 2.45, somewhere in that range, and have kind of since dropped back over the last couple of days of trade. But I think that's the market wants to make sure that it has the right amount of beans in there. So I think the market would be really happy if it's 94 corn, 90 beans. I think right now the number is probably 94 corn, maybe 95 corn, and probably 89 and change on the beans. So when you think about what's been driving fundamentally the soybean market, well, in both the corn and bean market, has been overall Chinese demand, and then the California low emissions deal going on with all the stuff happening in soy oil. So I think those are some important parts that, especially when you look at the beans, there's really an interesting item that's happening is that California low emissions deal. What is happening there is they are trying to say that you need to have X% of the energy used in diesel to basically be green or friendly, not fossil fuels from that. And that's what's really led when you think about what beans can be made into the meal and the oil share. It's very rare for the oil share to lead that rally. And so far, it has absolutely led that forward because you're trying to match this California deal to the point where they're importing items. We've got some plants that are going online. I think North Dakota is going to find a crusher for about 300,000 bushels a day. There's actually a plant going up in New Orleans. It's going to be 600,000 bushels a day when those are active. And those are all both being generated by energy companies. So I think one is Exxon. And I forget who the other one is off the top of my head. But anyway, it's not being necessarily driven from the grain standpoint. And that's been a major thing to the point where they've been running the crush to satisfy that oil need, but the meal is starting to pile up, and the business is not constructed to have meal being stockpiled and sitting around. And so you're starting to see this confluence when you look at oil, like what Sterling's showing, you got up here to 70 cents. We kind of have taken back the last couple of days simply because a lot of the crushers at this point in time don't know what to do with the meal. And when you look at that meal, it's the exact opposite. I mean, it looks like somebody just kind of kicked that thing, and it's a dead horse rolling over at this point, and even to the point where it's breaking some pretty decent support on that. So I think those are some really key things to understand how those are going together. And there is going to, much like you look at ethanol, there is some break evens at play, usually about the mid 70s on this oil share, even with that California, the Calp, going into play. That is going to be something to keep an eye on. And again, we saw some folks that found they could do it a little bit cheaper. So we did see a couple major commercials import some beans, or at least put on some imports for the last 2 weeks to come into our Gulf. And those will be used to crush and specifically fill those needs out there. So there's quite a few things. We've even seen the basis kind of fall off here in a little bit from some of those items. So a couple things to keep in mind there. So sorry, Phil, we didn't need to hijack the futures trade side of it, but just a few things that we're seeing.
Yeah. So do we want to show them the elephant in the room?
Yeah, let's do it. About that time.
Right. Yeah, here we better talk about the elephant in the room, and that elephant is China. And this is this morning's export sales number. And as you can see, the total was 4.3 million tons, with 277 being the old crop. So we had 4.1 on this report. China came in and bought again today. The USDA has China's import number pegged at 26 million tons. By my counts, China has bought about 40% of that already from the U.S. Now, we're always leery of when the Chinese come in and buy because they've been known to cancel things, and they are probably going to cancel some old crop orders. But you come in and buy 1.3 million tons for a day and you cancel 100,000 tons, well, you're still net up 1.2. They need to adjust their inventory and do their things. But they have been very reliable, and I'm going to show you the money chart right here. This is what we've shipped to China in terms of corn so far this year. Right now, and we're at 12.745 million tons. This is all of the previous 5 years' shipments. We've sent more corn to China in the last year than we have, if I put this out to 20 years, than we have in the last 20 years combined. So that's something that has changed, and this is something that's going to affect the market. And it looks like to me that things have changed in China. Their hog industry isn't just coming back. It's coming back bigger, better, and hungrier than ever. And their need for corn, I know they're talking about trying to use substitutes and whatever. That's years away. So new Chinese demand for corn is going to be a new thing in the market. Now, we can't count on South America necessarily always having a bad crop year, but it's certainly, when we tighten supply, that increases volatility. So seeing another red line like this for next year doesn't surprise me too much.
Yeah, and I would say that's probably our vantage point as well, Sterling. So as far as completing these shipments on the book, again, there will be some jostling around of those numbers as we move around with that. But right now, I would say we fully expect them to get the lion's share of that loaded and out the door. When you look at it, we would also see probably maybe not quite as exciting as this year, but we think we'll be in the ballpark for maybe even the next 2 or 3 years of the shipment numbers and levels that we've seen so far this year. And as you mentioned there, the hog market over there, that's something they want to keep an eye on. I think we're going to end up being probably a little bit more in the dark too as we go forward. It was interesting to see how this week would kind of line up. There's it's really hard to get information, good fundamental information out of China. And so like most places, folks here in the US, we subscribe to outfits that sit in China and kind of report on these things and give us a feel for the ground level when just phone conversations and other things don't quite match up. And there's probably 3 really decent ones, and there's 1 really good one of it. And last week, those kind of outfits and outlets went very quiet, meaning you weren't getting your normal reports and you couldn't talk to folks on the phone anymore. Again, kind of not sure what's going on with the folks like over at Feed and that. However, it was interesting when they went dark. We thought, man, this upcoming week, especially with the break in prices, we could see some pretty decent exports. And voila, I think we've added several, as Sterling just put there, several million metric tons to next year's crop. So again, information may be a little bit tougher going forward for outfits like ourselves and others, but that is just something that we need to keep an eye on there. And again, we fully expect to see, we could probably be in that 10 to 15 million metric ton each year. I don't think that would surprise us. Again, I think they're going to prefer South America versus the U.S. given our recent tariff spats and some other things we have going on in the world. But, overall, I think there's going to be a steady stream of business, at least for the next couple of years, coming from China.
Yeah, I would definitely agree with that. And having worked in the news and data information, trying to get information out of China is nearly impossible, even with an unlimited checkbook. The Chinese government will they will telegraph what they want you to hear, which means things that will try to probably soften the market. That's like, we had these ideas that, ASF is coming back. If I'm a Chinese trader and I need a decoy, how do I try to soften corn prices? Oh, I've got ASF in my big giant new hog hotel. Well, maybe I got 1 pig. I got 1 sick pig. That's sort of the game that can get played. But one thing, this is actual shipments. They want the corn, and they're in here buying it, and they're buying it at high prices. So that's a pretty good indication that the demand story there is, in fact, factual. How to get it down to as sharp as we get it here, that's not going to happen. But we do know that demand structure is going to be in place.
Yeah, and I think, what they basically ran themselves dry with the tariff dispute, between us and a few others that happened. So they're definitely restocking. We remember the vacuum cleaner of commodities that China was going into the '08 Beijing Olympic Games. They've got the Winter Games, I believe, in '22 coming up here. We're seeing a very similar build out. I think some of that underlying is what you see with the lumber and cement and some of those other, I'll just say, obtuse commodities that we've been looking at. So again, as we roll into that, that's kind of one of their chances to showcase to the world where they're at and where they're sitting at. And we're balancing that against some of the issues that they have in Taiwan and some of the human unrest that's being seen in Hong Kong. But make no mistake, they're going to make a show for the world in the next couple of years as they move into the Olympics, much like they did in the '08 Beijing Games. So, I think we'll have to see what happens as we move beyond that. But as Sterling's chart right here points out, both restocking from the tariffs and what they have going on to showcase themselves to the world. It's going to be an interesting couple of years here.
Absolutely. And yes, and food security is obviously number one in government's minds, and it's very much number one in China. So they are going to be on top of this, and they're going to be paying attention. Something else, and this goes back to the cotton. This is our current accumulated exports of cotton going to China. And notice, we are well ahead of the last 5 years. And if we take this back a little further here, as you can see, the only other year that kind of matches this up is, and what year is this? This is, well, look at that, 2006, right in front of those Olympics. So this is when the Chinese built what they called the Great Wall of Valence, where at one time they had enough cotton on hand to make some insane, like 28 billion T-shirts or something like that.
Nice. And they're not going to get any cheaper. I don't think they'll put them on sale for us either. So.
No. Cotton's one of those things, a little bit of weather there, and the stock market holds up. Cotton prices we could breach $1. That wouldn't surprise me in the least. In fact, with a real weather problem, 120 wouldn't shock me at all.
Understood there. Sterling, anything else you want to cover? Should we see if Christy's got anything in the inbox for questions?
You guys have had so much great information. I'm just blown away by some of these maps. Plus, I kind of like all the colors. Thank you for sharing all of that, Sterling. We have not had any questions, but if you do have any questions, please feel free to put those in the chat box. I do want to mention that we have our virtual crop tour taking place, and Brooks will be working on that, getting those reports out every week. We do have a survey that we'd like for you to complete, whether you are submitting information and photos every week or not. We would love to hear your input from the survey. It takes like a minute and a half to complete it, super quick. We'd love for you to do that. That'll be in our daily market outlooks every day, well, almost every day. So be sure to watch for those. Is there anything else going on, Sterling, Mike, that we need to let everybody know about?
Oh, everyone likes to look at this because we've been experiencing some pain at the pump here. Gasoline prices have gone up noticeably. I actually have maybe a little bit of good news here. Energy prices seem to be, if not plateaued, starting to get a little heavy here. And some of this was, you had all that winter problems down in Texas that interfered with supply. You've had some trucking issues and things, and those kinks are beginning to work itself back out. So I'm crossing my fingers here. I think maybe the high for the energy market's in. I'm not saying we're going to go down and get nice and cheap, or we're going to see, any crazy stunts like they're going, like when they went negative or anything like that. But hopefully there won't be any additional pain. We'll put it that way.
Boy,
all right.
Nice. Summer vacations come around here.
I don't know how nice it's going to be. Hopefully it's, gas at the pump is trading with an upper 2 or a 3 handle and not a 4 handle. That's
right. That would be nice.
All right. Well, let me just do a quick reminder here that we do have Sterling, who is going to be working with Bloomberg on a webinar here, May 26th and 27th. You are all welcome to attend that. It's a free link. Yay, we all love free. And Sterling is going to provide his color charts and commentary. And of course, we always love to hear what Sterling has to say. So if you want to
And that
register
will
to
be-
go
that
that,
will be- And it will be a recorded webinar, so you can watch it anytime. You don't have to, mark a special time or anything. You can just watch it at your leisure. And I'll have, my weather guys on there as well. So.
that'll be great. Now we'll know who Sterling, taps into when he's looking at some of these weather charts. We did miss Brooks today, and we miss Mike Toohill. Those guys just busy, but hopefully we'll have them next month. And speaking of next month, we have the WASDE report that we will do live, and that is on June 12th. That is a Wednesday. Do I have the date right, Sterling? Yes,
Yeah.
Wednesday, June 12th. And then our next third Thursday meeting will be Thursday. I know, Thursday, June 17th, same time. And we will be right on here doing the recording and hopefully have some information. I know Sterling said there's some big acreage numbers that we're going to be watching for in June. So we'll want to make sure that you're tuned in for that.
Those will be out. The June 30th acreage report this year is going to be, the market is going to be leaning on that, because I don't think anybody thinks what the WASDE number, the acreage, I don't think anybody agrees with that. So we're going to have a much clearer picture about acres, and we'll be through June. Our ideas about corn pollination, there'll be a little bit more clarity on that. It'll still be a little early for the beans, obviously, but these acre numbers are definitely going to be market movers. So that's something to keep in mind. And if prices are good in front of those numbers, make sure you get paid on it.
Absolutely. So we will also have a live report on June 30th. So you want to tune in, and we'll get those links out right away. And speaking of pollination, this is a really fun segue for you. Today is World Bee Day. Who knew? But bees are one of over 200,000 species of pollinators in the world. Thought that was a neat little fact to share with you today. And they do a lot of work for us. So we want to take care of those bees. And here's a segue for some crop insurance for you. We have an apiculture policy. You interested in that? You let us know, and we'll get you to the right people. So I don't have anything else. Sterling, Mike, closing words?
No, I think you summed it up well. It looks like, make sure that we're taking care of our pollinators. And as you mentioned, that's going to be coming up for our ag markets here before too long. So thank you guys for having me on. I certainly appreciate it.
Oh, absolutely. Anytime, Mike. It was a pleasure.
Yes,
Yes.
definitely.
Brooks better not disappear too much, or
Got it.
Well, we do want to thank you, and a reminder that today's webinar has been recorded, and it will be available in an upcoming Daily Market Outlook. So if you're not receiving that, you're going to want to. So send us an email to marketinginfo@sompointernational.com. But thank you again. Again, marketinginfo@sompointernational.com. Watch for the recording, and if there's anything we can do for you, shoot us an email there, and we'll get it passed around to the right person. Thanks again, guys. Really appreciate you being with us today.